What's up, you guys? Tim Trevathan with Tim Trevathan Homes, and Happy New Year 2026. And you know what that means? More real estate market predictions. Every year at the beginning of the year, I always do these predictions for home buyers and home sellers to kind of get a feel for what to expect here in Metro Atlanta when it comes to having to deal with real estate transactions. Is it the right time to buy? Is it the right time to sell? What can we expect, Tim, when it comes to this year in real estate? Well, if you haven't already, check out the other video that I've done where I go into a lot of detail with predictions. But this one, I'm going to give you even more. This is my free gift to you because some of these predictions are different than the ones in that video. So you definitely want to stay until the end to catch all of these predictions so that you can be up to date on whether or not this year is the year that you should pull the trigger to purchase a house or if it's the right time to move and buy at the same time. Let's dive into prediction number one. Mortgage rates will remain above 6%. Most of the top forecasters see the 30-year fixed mortgage rate staying above 6% throughout 2026. However, it will remain lower than the 2025 average of 6.6%. And so you can see here there's an overview from many different real estate research companies and firms that they specialize in kind of these models that you can forecast as far as the interest rate goes. And guys, take this first prediction with a grain of salt. The reason why is because a lot of times people get it wrong, even these gigantic research firms. In fact, when people were predicting for 2024 what the interest rates were going to be, people were thinking it was going to be around 5.5%. But in fact, it never did dip below 6% on the 30-year fixed conventional loan, and nor did it see that come to fruition in 2025. And I think we're going to see the trend continue in 2026. So for those that are trying to get off the fence, I'm seeing two types of buyers right now. One where they're still gonna wait because the rates are still high. And then there is the other set of buyers where they have a bit more motivation to buy, such as a family that's grown and they've outgrown their current house and they now need to upsize to a bigger house. For those, they may see the rates and say, we've waited 3 years, the rates have not gone down, so we're going to go ahead and make the purchase because it doesn't look like rates are gonna be coming down anytime soon. And if you ask me, do I think interest rates are gonna remain around the 6% mark? I would say yes. Prediction number two. Luxury market sales will not be affected by mortgage rates. As we saw this year, the luxury sector and the broader market are basically two separate worlds. Affordability challenges that dominate the general market are far less relevant in the luxury sector where cash has been king. Currently, cash transactions make up at least half of all sales. Well, there you have it. They just gave a reason as far as why home values continue, I wouldn't say necessarily rise, but definitely not falling in the luxury market because so many buyers are cash buyers. Meaning, regardless of the interest rate, if they go to 15%, it won't matter because they have the cash to buy it where they don't have to deal with a mortgage where they're borrowing money at such a high rate. So I dug a little deeper since this video is about primarily the Atlanta market and the surrounding metropolitan area. I want to do a case study so that you guys know exactly what to expect here in Atlanta. So I pulled data from one of the country clubs in Johns Creek called Country Club of the South. And this is one of the premier country clubs that I would say top 5 that people seek after when it comes to purchasing a home and living in a country club. In fact, I've got a friend that bought a house here over the past summer, and he actually loves this place so much he doesn't want to move away from it because it's just incredible in terms of the neighbors and the quality of life and the amenities. They have an incredible swimming pool facility, a slide. I mean, it's absolutely stunning. So I did a search on FMLS, our realtor site, and I put in Country Club of the South for the subdivision, and regardless of price, so all price points, and then I factored in active, coming soon, under contract, and close. And so here you have 28 homes in the search results. So again, ones that are currently listed for sales, as well as ones that are under contract and closed. So now I went back and I looked at just the close data, and here it is narrowed down to 14 homes. And then you can see here, these are the types of homes you can find, absolutely stunning, majestic homes. And what I found interesting, A lot of these were cash buyers, just like that prediction stated. Of course, that was a national statistic of about half of the homes that were cash buyers. You can see here's an example of one that is cash that I can see on the back end as a realtor. I get to see what exactly did these homes get purchased with, whether it's a conventional FHA, VA, or cash. And I calculated out of these 14 homes that closed in the last 6 months, that 5 of them are cash buyers. So 5 out of 14 bought homes priced over $1 million in cash, and that comes out to 36% of the homes bought in cash. So again, a larger percentage of these luxury homes are being bought in cash, as we just saw with that case study of the Country Club of the South. And so very much so, you're gonna see that here. And the other factor to keep in mind is that with these homes, there are less to choose from. Although that was probably the most active list I have seen of 10 plus homes that are on the market. But historically speaking, if you look at the last 5 years since COVID days, there have been a significant decrease in the number of homes available for sale. So inventory has dropped a lot. So while you've got people who are buying up these homes in cash and have more money, that demand has gone up. And now with the inventory going down, you've got less to choose from. So these homes, when priced right, even in the luxury market, they still need to be priced right. And if they're in move-in ready condition, they are selling fast. Which again, let's take a look at the statistic with these homes that sold. One more statistic that's worth checking out is that right here on the far right, it says TDOM, that's total days on market since it was listed. Now these are the active listings and they are sitting on the market quite a bit. The average days on market right now is 124 days. Now keep in mind, some of these may be priced too high. Some of these may not have the updates that they're wanting as far as the buyers that are looking for these kind of homes. So the better statistic are the closed homes. So let's take a look. So again, there were 14 homes that closed in the last 6 months. And look at here, the average days on market was 34 days. I mean, one sold in 1 day, another sold in 5 days, and another sold in a week. So that just goes to show that these homes are selling faster than a lot of other neighborhoods around Metro Atlanta. For example, if you look at, say, Dekalb, there is the average days on market there of about 55 days. And these homes are around the 400 to 450,000 median home price range. So even at that lower price point, you're seeing these country club luxury homes selling faster on average. That's a statistic that you want to pay attention to the rest of the year. Prediction number 3. Home prices will grow, but not by much. If you look at home value growth projections for 2026, you'll see they vary across the board. That's because pricing depends on local supply, local demand, and how sensitive buyers are to rates. But the majority of forecasters have home prices increasing 0.5% to 2.0%. And then there are all those research firms that have their own predictions. So again, this is a national prediction. So what about the Metro Atlanta market? I believe this is pretty spot on, and here's why. We've already seen home prices decrease some in the Metro Atlanta area. But if you look at the entire state of Georgia, let's take a look at this statistic. We've got the inventory of homes in the state of Georgia increasing year over year since 2022. And then here's the average sales price, which has continued to go up since the Great Recession back in 2008 that bottomed out in 2012. And it's funny because I love this. This actually shows 10 years back. And so it's literally showing the very bottom at the far left of this graph. And then the more telling graph would be the median sales price. I like this one better than the average sales price because you can have, $5 million homes that skew the average sales price. So the median sales price, which takes the middle number out of the entire bunch, is a lot more accurate number. So here you can see, yes, home prices have gone up year after year. Then when rates shot up in March of 2022, you saw that, that noticeable dip there leading into 2023, but then prices came back up as they typically do in the spring and summer markets. And then it's kind of flattened out there. So overall in the state of Georgia, we're seeing prices kind of remain flat. They haven't really gone down, but if you're talking about Metro Atlanta, we have seen that in Fulton County, in Dekalb, also in Gwinnett, Hall, Barrow, in places like Forsyth. So there is a little bit of an adjustment, but when it comes to buyers waiting on the sidelines, there are so many right now. And I think with the Fed rate being cut a few times, people were hoping that the mortgage rates would also be impacted in the sense of them coming down, but they haven't. And if the prediction, as we just already spoke about on one of the other ones, is that they're gonna stay in the 6% range, well, these buyers are like, well, enough is enough. We've waited long enough. I've been able to save up for a down payment. We're gonna enter the market. So I think that will increase some of the demand. And as long as the inventory is not gonna increase a whole lot, so with the nature of supply and demand, we may see home prices increase just a little bit. Prediction number 4, housing inventory will rise. We believe the effects of the rate locked phenomenon will linger into 2026. However, the impact of those effects will start to diminish. Most analysts agree that the housing inventory will continue to grow next year. So kind of building off of the last one, if inventory does not go up and the demand increases, we could see some home prices increase. But again, if it's 0.5% to 2%, I wouldn't even say modest, definitely not substantial. I mean, that's just a slight increase. But actually with this prediction, I also agree with it because we're at an all-time low in home sales. This past year of 2025, it was 4.1 million homes, which is historically at one of the lowest rates since the Great Recession. So again, going back to these graphs through the Georgia Realtor Association, the state of Georgia, you can see here the inventory of homes for sale. This is probably your best graph that could give you information to really understand the market here in Georgia. Every year since 2022, inventory has constantly gone up to where it is now exceeded pre-pandemic levels. Pre-pandemic meaning 2019 and prior to that. Why is that a big deal? Because a lot of the economists say that once inventory has gone back up to the amount where 2019 meets, that's where we could start seeing some home price adjustments start to happen. Why? Because as more inventory is increasing, that allows for buyers to choose between more homes. If there's not enough buyers to meet with the supply, it won't sustain home prices. In addition to that, very different from 2019 where the rates were 3%, we're now in a 6% interest rate environment, so that also can affect the home prices. Now, having also said that, there's a lot of other variables. This is just one variable. You gotta think about people who have invested in the stock market, in Bitcoin and cryptocurrency, wage growth from their jobs, and other people moving to the area from out of state who have more money. There's still a lot of demand that comes from those. So because of those other factors and variables, that's why home prices may not see a decrease as some may think. Prediction number 5, new construction will gain market share as buyer incentives continue. Now this, without a doubt, I could say is true about Metro Atlanta. We've got a lot of new construction here for sale, and in fact, more so than a lot of the majority of the top 25 metropolitan cities in the US. In fact, I think we're in the top 5, at least from the last statistic I saw, although that was kind of outdated from a few years ago. But I know that we have a lot of new construction, albeit these homes, if single family, are on the outskirts of Metro Atlanta. And if you see something in a more developed inner part of the cities, like Gwinnett, in the center part of Gwinnett, you're seeing a lot of townhomes. And I know some people find new construction to be notorious. There's this saying that post-COVID, homes are not built the way that we are used to. And some of that may be true, although it depends on the builder still, and doing an inspection and taking advantage of your home warranty. But having said all that, I think that we are seeing more sales from new construction because of the incentives. And in fact, the resale homes where I'm representing the seller, helping them to sell their home, if it's a newer home, say 2022 or newer, a lot of times there are neighboring communities that are being built, or even I've seen communities where they're still selling in there for 2 to 3 years long, where they're competing with the builder. Now, which home do you think a buyer is gonna buy? The 2022 townhome or the 2025 home that's still for sale by the builder that's offering massive incentives, where the resale home in 2022 is not? It's gonna be the new construction home. In fact, here are some emails that I get from various builders at different times where they're looking to offer massive incentives. For example, here's one called the Crofton Place in Snellville, and they're offering incredible buy down rates of 4.99% FHA and 5.49% conventional. And these are single family homes in the high 390,000 range. Here's another one called Oakwood. This community has several single family homes in the 3,000 square foot range, 5-bedroom floor plans. And look at there, they just make it plain as day. The price was $644,603. now priced at $594,990. So I mean, that's a whopping $50,000 price decrease. And so you can see there are some major price decreases already. And part of that is the incentive, but also because of the market shift that we're experiencing. And on top of that, they're introducing these huge buy downs in interest rates, as well as flex cash, which is a terminology that's being used a lot these days, where you can use it however you want to buy down your rate, to give yourself a credit towards closing costs, or even a reduction in sales price. Here's another one called Rose Creek. And these homes are in the $675,000 range, and they've gone down to the low 600s. So this is another example of these incentives that are happening that are attracting people to new construction right now. Prediction number 6, home sales will rise but remain below historical norms. Yes, sales are projected to rise on average to about 4.244 million next year, but they'll still remain well below historical norms. To give you context, in the past 2 decades, we've seen an average of 5.15 million annual home sales, with a peak of 7 million in 2005. So the 5.15 million number is a good benchmark number to compare to. So if that's the average for the last 20 years, and we're at 4.1 of 2025 with a prediction of 4.2 and some change in 2026, there's still gonna be less inventory to pick from, for various reasons, which I covered in the other video. So again, check that one out. Last but not least, prediction number 7, many investors are going to buy at least one property next year. Now again, this is talking about investors, so not primary resident buyers, investors who are wanting to buy rental properties and rent it out to tenants. They are saying from a survey that was done online that there's a predominant amount of these investors, whether they're first-time investors or seasoned investors, to want and build their portfolio with at least one additional rental property. Myself included, I'm always looking around for the next opportunity, but take a look at this statistic. Now, although this was an old statistic from 2022, it's still a good one to look at. Looking at the top areas in the US where investors are buying homes, Atlanta, Georgia ranked number 1 for 33% of homes that were bought by investors. Now again, that was 2022, and you can see this other graph here that really makes sense. You can see that the investor peak for Atlanta, Georgia was in 2021 leading into 2022, which is why that other graph was showing number 1 in the country was Georgia for investor purchases, and they have significantly come down since then. In fact, a 65% drop. Now, it's still quite a bit, I would say, if you look at compared to 2010 numbers, but of course that was a great recession area. But the fact remains is there's always investors looking. And I'm helping a lot of buyers that are buying homes as primary residents. Most of them are those, but then there are a few that are looking for their next investment property. So regardless of market conditions, you can find one. And sometimes you have to get creative, such as sending out mailers or calling properties off market. That's the kind of thing that you as an investor have to learn how to do. It kind of becomes a part-time job, but they are out there. And a lot of times, if you have a good team of contractors that you can just go and have somebody fix the HVAC, replace the roof, do this kind of hardwood flooring, replace the countertop with quartz countertops, and you can have them come in, give you good quotes, have it done in a very quick amount of time, and then flip it, get it ready for rental property. It can work out, and especially when it comes to location. In fact, I did another video on this property in Duluth that I sold for $355,000, and it ended up being a purchase by somebody who originally wanted to live in it themselves, but then they decided they wanted to rent it out, and there was a reason why, because it was the location. So check that video out for more kind of insight into what it is like to invest in a property here in Metro Atlanta. Be sure to like this video, subscribe. I cover a lot of content about the real estate market. If 2026 is your year to buy or sell a home, give me a call. My information is down below. I've been doing this YouTube thing for several years now. I've been in real estate for much longer than I've done YouTube, and I love to share information like this. It's exciting, and I can help answer any questions, so leave a comment in the comment section, please. I'll be able to answer it and would love to hear your feedback. Catch you on the next video.